In today's video, I am going to be introducing you guys to a very simplified way of looking at and understanding the markets, a very simple way of doing technical analysis. Okay, so the first thing that I want to show you guys is a very simple pattern that we're going to be using going forward. So this is the pattern, you guys. There are a few variation of this pattern, as you can see here, and it is a very crude depiction, but I want you guys to take a screenshot of this and just we're going to be referencing this pattern a lot going forward. Okay, the next thing that I want you guys to understand is, as traders, what we are doing is we are looking for repetitive things occurring in the market on a day-to-day basis, right? I personally am a day trader, and what I do is I look for things that repeat themselves in the market on a daily basis, stuff that I can use to engage with the market, right? Now, one of the most repetitive things is time. Okay, the each day is a cycle of 24 hours and it repeats daily every day. Now, if I understand that time is the most repetitive thing in the day, I can apply that to the markets, right? I can say, okay, if time is the most repetitive thing in the day, let me look at certain time ranges in the day to see if there are any repetitive patterns also forming, right? And remember, we're going to reference the pendulum that we saw earlier, and we're going to look, just cycle through these time series, and let's just scrub back a little bit, you guys. Okay, so this is the beginning of last week's trading, and we're just going to go over these days in order. And like I said, we're just going to look at these patterns. I want to highlight something to you guys, okay? Okay, so this is good. Now, understand that each day is made up of 24 hours divided into 3 trading sessions, you guys. We have 8 hours for an Asian session, 8 hours for a London session, 8 hours for a New York session. Now, I want you guys to focus your attention on the first 30 minutes of the Asian session, the first 30 minutes of the London session, and the first 30 minutes of the New York session, you guys. So we allow for the first 30 minutes of each session to elapse because we are going to define that range. Okay, we need the high that is formed in that time frame, and we're just going to draw that out to the next session, you guys, just for illustration purposes. And we need the low also that was formed in that range, and we're also just going to draw that out in time to the next session, also just for illustration purposes. And what we're going to do after those 30 minutes has elapsed, we're going to look for that pattern that we learned earlier, right? We're going to look for the pendulum, and I can see one forming right here. That's not the high. Right here. And I think this one is closing, but I'm just going to use this low. Okay, so now we are going to, inside of our pattern, you guys, we can see that we have the pendulum forming, and we also have the low broken right here. So this is very important. This is the candle that we need, you guys. So we're just going to select that and draw that out also to our session open right here. And we can go ahead and remove this. We can remove this. We can also remove this, but I'm going to leave it on there so you guys can see this pattern, because that is what is really important. As long as you guys understand that we allow for the first 30 minutes to elapse, because we want the high and the low from that first 30 minutes, and we're going to reference that range, okay? And this is the pendulum pattern. We have a bearish variation of the pattern forming, and this candle, we need the first candle that closes above or below the range that is formed in the first 30 minutes, okay? This is the first candle that is closing below the low right here, and it is also going to be our pivot candle for our pendulum, okay? So very, very simple, you guys. Very, very straightforward, as you can see. And I'm just gonna cycle through and pick out just give you guys some more examples of the same thing, and then we're going to reference our examples, and I'm going to explain to you guys what it is that is happening exactly. And we're going to do the same thing. We wait for the first 30 minutes to elapse. This is the London session, you guys, and we're going to wait for those first 30 minutes to go by, and then we're going to try and find that pattern. And I have one happening here. I'm going to highlight it for you guys. And when you guys are starting out with this, you are not going to be able to see it as clearly. You guys are going to have to study this very, very like in depth. You guys are going to have to stare at the charts a lot in order to see it as clearly as I can see it. But I'm going to show you guys a lot of examples of this happening, and just how much this is happening in the markets, and how you guys can use these levels to get into your trades. Now, if you guys notice, we have this candle being the first one to close already above the high. As soon as the 30 minutes elapsed, we have it closing, and this one falls very perfectly right inside of that. And so this is going to be the one that we reference. And it was this candle, right? Good. Now, another thing that I want to show you guys is also we are going to be labeling everything that we place on the charts, you guys. We want to keep our charts sexy, you guys. We want to keep our charts looking clean. We want to keep our charts looking crisp. We want to keep our charts looking sexy. Asian break. This is going to be our London break, and we're going to just cycle through and get our New York break all at the same time. This already happened, you guys. This is in hindsight. Hindsight is 2020. We already have this information, so we use it to our advantage. And this is the only way that I can show you guys that this thing happens so much, is because, well, you're gonna see it happening, right? So, and this is 8:15, so this is inside of it. This is 8:55. This is 8:35. So this is the high and this is the low, you guys. This is the first candle that closes in either direction. The first candle that closes above or below the high. It doesn't matter which one. We just want this range to be broken, like I showed you guys earlier. And this is the first candle that does that. And we're going to label that our New York break. Now, what do we have here? Let's find our pendulum. Let's find our pendulum first, you guys. We have one here. We have one here. This is a nice one, but it is using the first 30 minutes, and that lines up perfectly with our candle. So we're going to use this one, you guys. Okay. And we're just going to draw that out just a little bit more. Boom. Now, what is this and what does it all mean? Right. So what is the pendulum, you guys? A pendulum is simply used to refer to the tendency of a situation to oscillate between one extreme and another. Now, whenever we have this pattern form in the market, that is exactly how we're going to refer to this being called the pendulum. It can oscillate between one extreme and another, meaning it can this is going to be a turning point whenever we have this pattern form. This candle right here is going to be very specifically called the pivot. And what is a pivot, you guys? A pivot is simply a turning point, right? Now, if we have this as our turning point, we are not trying to guess beforehand where the market is going to turn to. We are not trying to guess where that turn is going to direct towards, right? We wait for the market to show us. And we see that here. What does that mean, you guys? If we are using this level to get into our trades and we understand that the market is going to turn here, we are looking for what are known as one touch levels. We want the market to form this level, move away from this level, come back to it, touch it one time, and that is the only time that we can use it. If the market delays and touches twice, that is no longer a one touch level. That level is invalid. We are not interested. Okay. Now, is this a one touch level, you guys? What do you guys think? Yes, this is a one touch level, and I'm going to show you guys what I mean. The market is moving away from our level very, very slightly right here. Okay. This would be classified as our first touch when the market returns to it. This is a one touch. Okay. Good. Now, the market stays at our level for our first touch. It is still there. It did not move away again. It is still there. You can argue that it did move away slightly here, but the market is still at our level and still there. And until here, we do have another move away. Okay? This is very important, you guys. We have a second move away from our level and then a return to it. So what does that mean? What does that mean? One touch level. So how would we enter into how do we use that information to trade in the markets, you guys? Now, whenever we have we're gonna remove these, and I'm also going to remove this one, and we're going to just keep this one. I'm also going to remove this one. Keep the charts clean, you guys. Clean charts. We want to see the candles, okay? Now, whenever we have our first move away right here, what we are essentially saying is that if and when the market comes back to this level, I am expecting a one touch. Now, I am going to go short like this, and I have measured this level, this as my risk parameters for my trade. This is essentially the risk that I am taking on my trade, and I want to cover for the spread on my brokerage firm, whatever that is. I want to cover for the spread myself. I don't let the broker cover for the spread, because sometimes you will get knocked out of your trades too easily like that. So I like to cover for the spread on mine. I don't know about you guys, but essentially this could be the risk that I'm taking on this trade, and targets are set on a higher time frame. But just to show you guys an example, that would be something that is happening that we would have aimed for, even though, you guys, we would have been getting stopped on this trade. Okay, now what does that mean? We could also, you guys, have been using this level as a not in the opposite direction as a one touch level. Okay, we have a move away here in the opposite direction. So this is the first move away. Since this has formed, this is a pivot point, you guys. We are not like married to the idea that it's going to go up or go down, okay? We are looking at what is happening and we are waiting to see what it does, and then we can follow along, okay? We are not trying to guess. We are following along with what is happening, reading the narrative, following the script, you guys, okay? So when we have our first move away and our return, same thing, you guys, okay? Now, if I am going long here and I am covering for the spread because I don't want to let the broker do it, I want to do it myself. This is my risk parameters for my trade. So my stop and my entry is anywhere around these levels right here. This is my risk that I'm taking. So I am entering and my stop is at or around these levels right here. And same. I probably would have been aiming for this. And that would have been a good trade. You guys, taking profit is going to be very important, you guys. You have to take profit, okay? Very important skill to learn is taking profit. Now, same thing applies, you guys. Same level, and we are looking for our move away. We have our first move away here. Return to it. And if we are going long, what is happening? We are covering for the spread. We don't want to let the broker do it. I want to do it. Well, you guys, we're getting stopped, okay? It is not going up there. But shortly thereafter, we are waiting for the move away. We're just waiting for it to move away. And if we are going short on the return, well, patience pays, you guys. Patience pays. Patience pays, you guys. Patience pays. We would have had that opportunity if we would have held it. Would you have held this trade, you guys? Be honest. This is taking a long time to happen. Do you have the patience? Do you have the wits? Do you have what it takes? And like I said, we are day traders. That is a long trade, and we can find this happening many times every day, you guys. We allow for the first 30 minutes to elapse. We look for our pattern to form, and we have that. That is not the high. This is our pivot. And wow. Not much more needs to be said. Where did it move away? Our level formed. We waited very patiently for the move away. The move away has happened inside of the initial balance on the London session. Slight move away. One touch. Boom. And one touch. Boom. And if we do the same thing here, first 30 minutes, this is going to be the candle. And the first candle that closes above or below the New York session, that is the one that we choose. And we just draw that to the next session also. We look for our pattern to form for New York session. That is going to be something that we can use for a bit of a like a longer term, a stronger level. A stronger level is going to form in our New York session. Our New York levels are going to be stronger. And we want to label everything that is going to stay on the chart that is not. And not more needs to be said. We have our move away happening. One touch. Boom goes the dynamite. And if we were to just have our short position covering the spread, this is also the same trade, you guys, that as we said, patience pays. This one, it would have tested our wits. Did we get stopped? If we held, we do not get stopped. But would you have held it? This is a lot of patience, you guys. However, we are day traders. There are many such opportunities present. We don't have to wait for that to play out. I don't know if I would have, you guys. Maybe. I like to think that I have it in me. But I'm a day trader, you guys. This is good enough for me. And like many such opportunities, that is just one of them. And each session presents its own opportunity. You are not trying to force it, okay? You are not trying to. This one we are getting stopped one time, so it's not a one touch level to the upside, okay? So if we are waiting, we are getting stopped, and applying the system properly, we are getting stopped on this trade, and we are also getting stopped on this trade. If we are using it, is it a one touch level for a long position? Is it a one touch level for a short position? And if both of those evaluate to be false, then we leave this level alone. It is not a one touch level, and we already found that out, okay? One time is enough for me to know to leave this level alone and wait for the next one. Same thing, you guys. We are waiting for the first 30 minutes to go by. We're going to reference that range. We want the high and the low. We are waiting, looking for the first candle that closes outside of that range, which is going to be this one. We're looking for our pendulum to form. We have it right here. It is not closing above the high. We have it right here, and this is our candle that is forming on our pendulum. This is the pendulum for those of you guys who are not seeing it. For those of you guys who are not seeing it, you need to study more. going to label this as our Asian break. We also label this as our Asian break. And as you guys can see, this is not a one touch level. We would have used it. Use your levels responsibly, you guys. Okay? Use your levels responsibly. If we are going short here, covering the spread, whatever it is, we're actually, if we are going short here, you guys, once the market has moved away, if it comes back to our level, is it the one touch level? I am willing to bet some chips to find out. And this is the risk that I am taking. This is how much I am willing to bet to find out if it is a one touch level or not. And the market is telling me that no, not this level, not right now. That is okay. I risked responsibly, you guys. Okay. And I am waiting for the next level to form. These happen many times a day, so I am not worried if that one was not it. And this is the 30 minutes. We are not closing above the high, so I am not interested in the high. What about here? This is the first candle to close below the low, forming at 810 was a low on the first 30 minutes. This is the low in the New York initial balance, and this is going to be the New York break actually. Now we do have a London break that we did not use, we did not reference. You guys can do your homework on that one. I'm just showing you guys that there are many examples of this happening every day, every time. And also, we would be getting stopped on these ones. I guess I'm showing you guys some bad examples of this, because that is also good that you guys go through and look at the bad examples, you guys. That is when you will learn, and this is where you have to be honest in your practice, you guys. Okay, so we are having our one touch level right here, and we would be going short if we are applying the system. And as you can see, this is a stop hit for us, and we are also going along here using the inverse, and yes, we are getting stopped, and that is okay. If that's not the level, we have the next session, you guys. Remember, risk responsibly. Okay, and if we zoom in a little bit more on this one, we have the low in the initial balance, and we have the high. Which one is breaking above the high? This one. Now, we label it. This is also, well, user discretion is advised, you guys. How would you have placed your trade here? Me personally, I would be entering like this, covering just the spread on my broker. So I probably would be getting stopped like this before this move even happened, which is probably going to be okay, because, I mean, I don't look at this happening. Look at this, you guys. This was actually NFP, but you guys can backtest this some more. You guys can look into this some more, and I'm going to be showing you guys myriad of examples going forward, and you will see that this happens every day.